Dark pool transactions, the secret ways that Wall Street gets in and out of its largest positions. Why does it matter for us as traders and investors as we see some of the largest we've ever had on certain pairs? In today's video, we talk about whether markets could be topping in February and what the data shows us moving forward. Also, what about momentum starting to shift in certain markets such as crypto? Has maximum fear been achieved? Well, that and more coming up in today's show as we cover some of the biggest sells of the last couple of days and what they mean for all of us. Stocks, commodities, and cryptos. Let's get into it right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we need to talk about the latest macro, hottest charts, and of course, the key levels that you need to be watching right now as traders and investors. But also, what's just been going on? JP Morgan lost 4%, Walmart lost 6%. Are the markets starting to show signs of concern for the first period for quite some time? Well, let's firstly talk about complacency in bonds. This has been a discussion point that not enough people are talking about, and it leads us to believe that we may be in a period similar to where we were just before the global financial crisis. Basically, nobody thinks that there's any risk in any types of debt right now, and that the Federal Reserve will come to save us all. And of course, that's been correct now since the global financial crisis. Bank crisis, don't worry, the Fed's got your back. Something else going on, don't worry, the Fed will just print more money. And as of course that ends up happening, we reach maximum levels of complacency. And the difference between high yield credit spreads and corporate bonds, that is high quality bonds in giant companies, seems to be the tightest that we've had in over a decade. So why is this a big concern? Well, it leads us into saying, could we be topping in markets? And are we about to reach the end of this current bull run in terms of both the last 3 years and the general one that's been going since 2009? Well, first up, we've got to look at the stats. Let's take a look at February together and see whether it's even possible. Well, it's only ever happened once. And of course, when February was the topping market, it was 2015. Now, you've got to remember, since 1980, February has not been actually a traditional topping market. And while this stat alone is nothing that we would write home about, it's interesting to see that December is overwhelmingly the top for markets generally, along with October and November and January. So it looks like maybe there could be some more to come, and we'll discuss why right now together. First up, it's usually around earnings. Margins typically peak in stock before we actually see the end of equities. And you'll notice here that we are not seeing basically a margin peak just yet. It seems likely that we're going to go with a period of still a little bit of growth. And the reason is quite simple. This earnings has been pretty good. As you can see here, 12-month trailing profit margins and generally anything excluding tech has actually been on the massive uptick across the board. And when we see this type of growth, we have what we usually call a broadening market. And it brings us into a concept of, are we seeing huge rotation specifically into certain defensive sectors of the market? And is the run in financials over for now? Many people don't know this, but the financials run tends to be more of a mid into late cycle kind of run. And of course, if you look at the last 12 months, financials have been the best sector. Maybe that's not going to happen anymore though, with JP Morgan selling 4% in just one session. Let's now talk about record assets, because it looks like everyone's piling in. 42% plus of American households are now invested in the market. We've talked about this stat and why we need to be paying attention to it. I wouldn't be surprised if we get to 44% plus by the time we top out in these markets and actually see something explode. But remember and keep an eye on this. Record assets are now parked in leveraged funds. And this is a new phenomenon. It's never happened like this before. And of course, you've got to ask, who are using a lot of these leverage funds? Well, short-term big traders, of course, but it's mostly retail. Everybody's ability to get access to easy, cheap margin is now accelerating. And of course, people are taking advantage of that. And why wouldn't they be when you take a look at the last 2 years of bull run? Now, of course, as we mentioned, if we started in October of 22, then that means that October of 25 will mark this kind of end of this particular year 3. So could we still be grinding up? Well, I actually did a poll on this and you guys responded overwhelmingly, and possibly it's because you've seen this chart before, that we will go up and down in a very violent way this year, but in general, grind higher, making new higher highs, and basically be in what we call a dull market. Now, there are some stats surrounding this. The first one is, of course, we did something that usually is pretty bad for markets, but then reversed it. And that was that we took the December low in Q1. Now, historically, that's been a really bad stat, but we managed to see the stock market regain off that, find that kind of V-shaped reversal to a new all-time high, and actually just before Valentine's Day, managed that 3% plus, which has only ever happened another 5 times, and all of them ended up being quite positive. So, of course, there are positive and negative stats, and what we do on here on the channel is we build the level of confluence together on what we're kind of expecting. When we take a look at confluence, one of the things that we've mentioned now for about a month and a half has been the pretty much likelihood of the US dollar actually weakening. Now, we can see here Trump first term, we actually see a very similar run to the dollar, and Trump 2.0 looks like it's kind of following a similar path. Now, with weakness in the dollar, what could that benefit? Well, we've talked about how it could benefit China, which is absolutely ripping, something we've been looking at now for over the last 12 months. Pretty much the best performer now. It's even beaten out our other one, which we've loved, which is gold. And of course, it seems to be firing on all cylinders with the latest Barber report. But I want to talk about dark pools because we're seeing big transactions up here at the highs, which could mean instability is coming. So first up, let's take a look at the DAX market, at the German market. Now, you may have read in the news and seen that over the last week, everybody was talking about the German market. And we saw particularly defensive stocks skyrocket to the moon. And then, of course, now they've cooled off a little bit. Well, just as they hit crescendo, we saw a dark pool sweep on one of the big ETFs. Now, of course, what does that tell us? It's probably a take profit. And you can see here the last time this happened in the German markets was actually 2021, and it marked the beginning of a pretty significant sell-off that actually occurred after that. Now, while we're not thinking that's necessarily there, take a look here at another fund. And this is certainly the problem right now, and it will bring out the bears. And that is the question of, are we in a mega distribution with tons and tons and tons of sales coming in from the street selling to us retail traders? Well, take a look here at this particular fund, XLG, basically the S&P 500 top 50 ETF. Now, while it's not the biggest in terms of overall volume, I think you can clearly see here that there are a lot of dark pool bubbles appearing at the highs and near the highs. And this has many people wondering, are these all sells across the board? You've got to keep one foot out the door in 2025 because, as we know, while we expect it to grind higher and kind of be volatile all over the place, these types of things could mean a Wyckoff distribution is in play. And I have seen a few of you mention that in the comments down below. And of course, we are open to this idea because, as we know, margin is accelerating at extreme rates. Speaking of margin, we've just seen a large Barber position clear up just after the earnings. And while the earnings was really good for Barber, obviously skyrocketing the stock, you can't really discount some of these big transactions. The second biggest one happened, the market fell off. The third biggest one, the beginning of the rip that we've been on so far together. And of course, this massive transaction just coming out over the last 24 hours. It may mean that it could be a buy. It's unlikely though. It's most likely someone taking profit after positioning themselves very well down near the lows. And it could stabilize and mean that basically things like the China market are basically in some form of consolidation after what has been a super impressive move, and everybody is now aware of it. Let's take a look here at some of the largest transactions just before the big moves of Barber. This happened 2 days ago, and you can see here all those transactions got ripped straight away up, and then they've gone up since then thanks to some of these results. So you can always say that these dark pool transactions, they tend to be pretty good when you find the right ones in the right areas, and of course you price them up with price action data and other things that we like to do here. Now, I want to mention another warning sign. Guys, we haven't seen this in quite some time, but it is a cause for concern, and that has to do with home builders. So, of course, if you look at home builders, you can see here that we've only had these types of large transactions a few times. Now, we brought this up months and months and months ago, but now we have the result of the beginning of what just happened to home builders, and it doesn't look very good. The biggest transaction ever recorded over the last 10, 15 years and it happened right at the peak. And so far, the market's gone down. Now, as you may know, home builders can be considered one of the economic health reads for the markets, and this is a cause for concern. And of course, for bears, you guys will need to be watching it. Let's take a look at some of the other interesting things. This one is, of course, from the perennial bull, which is Tom Lee and Fundstrat, and he is super bullish on the Russell 2000, and maybe rightfully so. We spoke before about the concept of rotation. That is that maybe the biggest tech stocks, they're kind of starting to, I would say slow down. And in fact, if you ever poll any retail traders, about 65% of retail traders will say the best investment right now is actually FANG stocks. And that's interesting because that's going up from where it was only a few months ago. Now, I'm interested to see what you guys think, so we'll actually do a poll on that soon. Stay tuned to the channel and make sure to subscribe and answer that poll. The stats will be interesting. We'll share them soon. But small caps could be potentially getting close to maybe a little bit of a breakout. Now, why is this important? Well, every single time we've seen these consolidations for extended periods of time, 4 years being the study here, we've had that last kind of impulse move that's come out of small caps. Now, traditionally, you would need rate cuts to come through. So obviously, the yields would have to fall through at key levels. We'll look at those soon so you see when momentum would come into the small caps. But do remember, this year is different to others. We've already discussed that healthcare is one of our favorite sectors. And year to date, it's been number one. Financials is losing ground as of the last 24 hours. And obviously, a lot of people have been in external markets. China, HSI, obviously the DAX, FTSE, and others have been doing quite a lot better. But it does look like most money is flowing into different sectors. I think that's very important. Consumer discretionary, which was really hot, and financials seem to be getting sucked out when it comes to the hedge funds and what these guys are doing. Now, will we get a test of the 200-day this year? Remember, the stats seem likely. So if we are seeing, let's say, some form of distribution, there is still a good chance that the market has incredible bullish animal spirits. And of course, while we're seeing a couple of warning signs here, we don't have enough to stack together to say, oh, it's the beginning of the end. Margins up, definitely home builders is a concern. There's, of course, potential distribution, but you've got to put in everything in line before you go, wow, Michael Burry on this and say the whole thing is going to crash across the board. Now, will we test the 200? The stats are, of course, very much in your favor. Since the 1990s, every single time we didn't touch the 200 in the previous year, we did so in the following year. And 3 of 5 of those times that it happened were in Q1. So, of course, Q1 is something we need to be watching, which is where we are right now. Let's now talk about a couple of massive short positions. Silver, record shorts, short interest through the roof here on silver. China, if you can believe it, it's going up. People are still stacking shorts. What are these guys doing? They're absolutely insane. I hope this is not one of you. But yeah, people are trying to short against what is a ballistic market. Don't short ballistic markets in China, guys. It is very dangerous. Of course, we did pick the top last year, but that was, very specific time. And generally speaking, you do not want to go against that type of potential squeeze. You've already seen what happens. And then treasuries, interestingly enough here, all-time high shorts. Now, of course, there are a lot of longs as well, so this only shows one of the stories, but it's something interesting that we should be paying attention to. Let's now take a look at the rotation of the last 24 hours and the last 5 days. Financials and consumer discretionary were really out of focus, which tends to be that mid-cycle kind of run thing. And we did see a bit of a resurgence in gold. Actually, energy did pretty well, and then healthcare, bio, 2 sectors we've been looking at in recent days, coming through with some goods. Now, if we look at the last 5 days, semiconductors, number 1 almost with energy, and then bio, number 3. And of course, what have we got down the bottom? The financials, consumer discretionary, and home builders. So there are some causes of concern. There's clearly some rotation going on. And that means, of course, we need to look at the S&P 500. What does the options flow tell us and the price action itself? Well, first up, the price action is still bullish. You cannot look at this just yet and say, oh, wow, I'm going to be a big bear and sell all of this. If you are, maybe options are your best go because it could go like that easily. But for now, you can see the market sold off. It came down underneath 6,100, which is that very important put level of the last 24 hours, and then it blitzed back up. And you can see that that is represented by this wick that's here. So the market is still relatively strong and still in positive gamma, pushing towards, you would have to think, 6,200. Take a look here at the futures. You can see here again, the wicks have counted quite a lot towards this market so far, and it still is grinding higher. So the market seems to be grinding higher. And when you take a look at the options levels, remember, as long as we stay above 6,100, we're in positive gamma. That tends to have a flow-on effect, and 6,150 and 6,200 become the next major strikes. And this is exactly what we've been mentioning now for weeks, that we're in that area where it is the bulls in control for now. What about some of the other markets? We saw a little bit of a sell-off in Tesla as it approached 360 and then struggled around that zone. And of course, this one is in the news for so many different reasons. And of course, we've got here the potential to still get back to 375. And we'll talk about that later on. But if you notice, where are the puts? 320, 330. So that's where the really strong put buying, that is probably the buying support, is going to be. And of course, the calls are smattered across the board. But I think 375 needs to be watched for sure on this one. Now, when we scroll over to everything else that we're seeing right now, you'll notice 140 is a massive strike zone. So basically that just means that we are at that core wall. We are at the point where you'd have to expect Nvidia to go sideways. And why? Because earnings is next week. Now, we have a special coming out on earnings. It is not to be missed. It's on our weekend. You'll very much enjoy it. And we'll be talking about why the options market is potentially actually pricing the wrong move on Nvidia. And you'll see why when we look at the averages. So the options market seems to be thinking things are wilder. We'll find out who's ultimately correct, but we'll be looking at some interesting tools. Now, let's move over here to the movement on PLTR. Of course, this is the stock that many retailers, like a lot of you guys in the comments, have probably been riding high and loving life on. But is it over for PLTR? Well, 105, we are about to see how this thing struggles through this area. 106.27, obviously the area we're at. In the previous video, which unfortunately we lost, but anyway, it doesn't matter. We've got this one up here for you guys now. I was going to mention 105 was the major support, but it actually went underneath this level and then rallied back above it. 105 puts and 100. So of course, the two levels to see buying pressure come back in, 105 and 100, guys, definitely worth checking out. And of course, it's got a lot of bullish resilience, but at the same time, losing 20% that quickly after, of course, the huge rally could mean that even when it rallies up, that the beginning of kind of a consolidation or even weakness period could be here for PLTR. We'll talk about it soon. Let's now take a look at the options market. How is it looking? Options risk is certainly up over the last 24 hours. So that's an interesting one. We'll keep monitoring that. Overall yields didn't really move too much. You can see here, they're all still holding those trend lines up. But if this changes, we'll have to pay a lot of attention to it. So again, yields could be the catalyst for things like treasuries, and they also could be the catalyst for a few other markets. You can see here treasuries are holding relatively firm as we have huge amounts of shorts on treasuries, but we're not allowed to see them kind of fly up high until those yields break low. I think that's going to be a big point for it. And home builders continues to look like rubbish. Now, whether you're using ITB, which is construction, or you're using XHB, you guys would know that these are not exactly the types of charts that you look at and say, wow, that looks super strong. We've had a series of highs, and of course, we've got higher lows, but we're about to potentially break through a very significant level. If that happens, it's certainly a caution sign for investors. And that, along with the leverage that's coming in, the complacency in bonds, it could be a cocktail sometime this year. Let's move over to the dollar index. What's going on in the dollar index? Well, the US dollar is, of course, weakening. Nice. That's exactly the way we kind of suspected it may go. And that's pretty good for people that are trading that euro, Aussie, pound, all of those things in the long direction, which is usually the way you do it. Now, we're coming up to the most important area. It's just under 106 zone. So we could be seeing some significant breaks very soon, and the dollar may be a pretty large trade that could continue on for a while. Now, what's been going up with this dollar weakness? Gold continues to get closer to our magical 3K zone. It's super dull. It's super boring in terms of the way it's moving. But guys, I'm sure a lot of you in the comments are pretty happy with gold. Obviously, we've been very bullish on this for a long time now, coming and approaching that 2 years, if you can believe it. And what a run it has been since those 1,700 price levels. Now, Are we getting close to the 3K mark? Yes. Could we go higher? I suspect we could over the next 3, 6, and 9 months. But you've got to remember there will be a little bit of targeting around this area here. So I still think there could be a little bit of take profit around this zone. What about silver? Well, it does seem to be bucking the trend, which we suspected it may. Of course, it hasn't taken out this previous high of this huge rejection we saw last week. And now what we'll do is we'll obviously be looking for weekly closes and some further information. But it has managed to hold up. Bears will be solidly trying to push it down from here with stops above the high. But if these highs are taken and markets close, silver could be on for a new multi-year high. And that's going to be a significant point for that metal. What about oil? Stuck in range. So we're stuck between 73 and 70. And just remember, this is a geopolitical kind of trade. So it's very risky in that kind of access and point. Now, what else have we got going on here? Of course, we actually have Tesla stuck in between the range. We see 330, 320 in terms of the puts. And on the call side, the resistance, 375. That's where the 25 and 50 EMAs are crossing. And we've also got the supply. And we've got the previous support becoming potential resistance. So that's a good level to aim for if you are feeling a little bit bullish on Tesla right now. Nvidia stuck in the range ahead of the earnings coming next week. So that's, of course, going to be a key thing. And if you look at PLTR, let's just do a measurement here. It may not look like much, but from top to bottom, this thing actually went down into the 100 level, which is that major put zone. And you can see it lost 24.14% in a couple of sessions, literally just 2 sessions. Now, the problem with this is that it's likely to find a buyer. And of course, it did instantly. The issue is, what if it taps out here, creates a double top, or even does something like that? Now, this is a common setup for the end of a monstrous trend. So we are putting the caution wipers on PLTR, similar to when we cautioned over here and it went sideways. I wouldn't be surprised at all for a 1 to 3 month sideways run. And you might say, why is that? Well, it's to do with the hype train that's on this. Look at these volumes. They're huge. Retail, super bullish. I understand why. But at the same time, big runs, big valuations. And of course, somebody dumped big time. So you've got to keep that in mind. HSI, yep, pretty nice move on Barber, of course. And it looks like everyone's getting kind of funny with the tech. But at the same time, we're at that resistance. So we'll see how that plays. Great move so far. Congrats. I could see a lot of take profiters here. I think 25,000 though will be on the cards in the future for that one. Now, what about US 2K? Stuck in the middle of nowhere. Again, yields. Yields are going to matter for this thing to get really momentum. So if Tom Lee's going to be right and the market's going to go up, then in general, we're going to need to see yields drop. We'll be the first to talk about that on this channel. Make sure to subscribe, guys, for that. NASDAQ, what's going on? Well, it's sitting in the middle of nowhere, really. It's just at those all-time highs. And again, the wicks, the dojis, for now, the market is still bullish across the board. And that's just kind of the way you've got to look at it. What about Ethereum? What about Bitcoin? Well, we saw flows still coming into Ethereum ETFs, which is interesting because Bitcoin's been a little bit weaker. But overall, it's holding above 2,600. It's slowly climbing. One day it's going to do something. I think the big thing here is Bitcoin. So Bitcoin actually is approaching a very important level just underneath, because we saw this wipe here. We're looking at about 99,000. Now, if we get above that, we're actually snapping and creating a doubling bottom style pattern. So really, again, our suspicion here has been maximum fear. Our suspicion has been consolidate a little bit, allow a lot of big positions to come in, and then hopefully see that resurgence of crypto. It seems unlikely it's over just yet, but a lot of people are super negative on it. Price action wise, we've been going towards the more bullish structure underneath. So some big breaks potentially here Friday into the weekend. This is one we'll certainly be watching. Now, when it comes to news, really the only thing you need to worry about is a bunch of PMI data. Just remember, 9:45 a.m. New York time flash manufacturing PMI is out. And if you want to find out more about what we do here at FX Evolution, check out our 7-day flash sale, specifically the advanced course. If you want to learn about cycles, data, macro, flows, and understanding the world, I'm telling you, in a totally different way, some of the things we talk about in the show, and plus a lot more that will really bring your understanding there. And of course, if you want to follow us over on X, check us out on LinkedIn as well. I'm posting a bunch of psychology stuff there this year. And yeah, it's great to have you guys. So remember to subscribe. We'll see you in the next video. We've got a banger coming out on the weekend as well. Bye for now.